Matt Justice here for Tackle Trading. Just want to do a quick video on how to research for credit spreads. Option traders, we do something that's called running the numbers. We find a potential trade that we'd like to do, but then we have to run the numbers. And every now and then we get so used to trading certain stocks that we don't understand, okay, if this is really a good trade or not. Well, about a couple of years ago, I was a little frustrated with how traditionalists would teach and apply the rules for credit spreads. And it would always say, okay, 10% of spread, 10% of spread, 10% of spread. Well, that was all well and dandy until you realize you can sell a 30 delta and get 10% of the spread, or you can sell a 10 delta and get 10% of the spread. It doesn't make it the same trade. So what I want to do is that we're going to do a little bit of research, and we're going to research two different stocks here. We're going to look at Amgen, and then we're going to look at AZO. All right, and what I'm going to do is basically what I do as a credit seller is I make a list of the stocks I want to trade in any capacity for credit trade purposes only, and then I fill out my spreadsheet that I've created, and then basically my spreadsheet will tell me if it is a good trade or not. So I'm going to put this spreadsheet on another monitor, and I'm going to get the relevant information for these trades. So I'm going to first fill out the Amgen trade. And basically the first thing we need to get is the price of the stock. The price of the stock for AMGN, get that right next time, for AMGN is 159.60, so I'm going to fill that out. The ATR is $3.72, $3.72. The month we're trading is January. The support level that I'm going to sell under is right there at 145 based on the probability of expiring cone. So I'm going to sell the 145. It's got a short put delta of 0.15. That gives me 85% probability. We're going to buy the 150 contract. We're going to do 8 contracts. And $3.72. January. Now I'm going to simulate the trade to get the net liquidation value and everything. So we're going to simulate that trade, sell vertical, and we're going to do 8 contracts. Okay, that is a $344 net credit, 344, buying power of 3,656. Okay, the ROI is right around 9%, and the ROID is right around 62%. Now, whether that's a good trade or not, honestly, I really don't know. It's about 10% of the spread, but I just don't know if it's a good credit or not because I don't have anything to compare it again. And then we're going to do the AZO very quickly, and we're going to say, okay, AZO. Let's get all the stuff we need for you. Your price is a rock solid, and as you can see, both of these two are in uptrends. 112.83. The ATR is $11.60. We're going to trade in January. The support level we're going to sell under is right there at the 570 mark. So we're going to go to the bull put. We're going to say 507. We're going to sell that 570. That's a 16 delta, very similar to the other one. And we're going to get $1 credit per contract. Confirm and send on 4 contracts to make them equal. And so we got $400. So we're going to sell the 170. Short put strike is 170. Short put delta is 0.16. 0.16. Long put strike was 160. 4 contracts, 400. Buying power is 3,600. Now let's bring my spreadsheet back over here, and I'll kind of explain it. Both of these trades are very similar trades, okay? They both have 15, 16 deltas. They both have in terms of, let me see, make sure I got this right. Short put strike was not 170, it was 570, and that was 560. Okay, they both have similar deltas, similar credits. But the one that for me stands out is the AZO trade. It's not a great trade, but the AZO has a 69 ROID and the Amgen trade has a 62 ROID. What that means is the ROI in comparison to the delta is a little better on AZO than it is on AMGN. So once again, this means AZO is a better trade. So if I was looking for one trade, I'd go in, I'd place that trade there. I'd put my alert right at 575, and that's how I would research the difference between two credits. I'd fill out the numbers, or as we like to put it, we would run the numbers, and it would help us determine which one is the better trade. On this one, I'm getting a very similar ATR buffer, very similar deltas, but I like the AZO trade because the ROID is slightly higher, 69%, once again an average ROID, but it is still slightly higher than the other one. Hope you enjoyed the video on researching credit spreads. This is Matt Justice for Tackle Trading. We'll do researching credit spreads for the bear call for a video here in just a little bit.